Hello everyone and welcome into the channel. My name is Brent. What if I told you the way to live rich right now and retire early can be hidden in your wallet and in your portfolio? Most people think credit cards are a trap, but when used with the right investing strategy, they can become a secret weapon for building wealth faster. Stick around because I'll share with you how I've used this combo to stay cash rich, earn rewards, and still grow my net worth all without debt. So in today's video, we're going to go ahead and cover Live Rich, the credit card and investment combo for early retirement. Discover how combining smart credit card strategies and consistent investing can accelerate your journey to early retirement. Now, here on the channel, I help people build long-term wealth by staying consistent through simplified investing challenges and real transparency. So with that said, I'm going to go ahead and cover transparency here, some of the platform that I've moved to being my all-in-one spot for both income and expenses moving forward. And I'm going to go ahead and share with you how you guys can use it as well. So number one, we're going to go ahead and cover why living rich isn't just about luxury. Now, luxury, a lot of individuals got to shift the mindset that luxury and living rich is having millions and millions of dollars. It's not that, right? It's financial freedom. It's being able to have multiple choices and control of your own time, whether that's being an individual, being able to spend time by yourself, traveling, adventuring with friends, loved ones, family, and just having full control of your time. And these are habits, small habits now, whether you're in your 20s or 30s or 40s, that can be big rewards later on. So that's why I want to share what I've learned today with you guys in case this is something that you want to use in the future. Imagine working because you want to, not because you have to. And let me know down in the comment section below, what is one small money habit that's helped you feel rich without overspending? That's a good question up for you guys. Okay, number two, early retirement equals cash flow plus control. So as I said earlier, it's not about having millions of dollars. It's about having enough cash flow from your investments to cover your life. Now, had access to and been using now for a while the Fidelity platform. And I'm going to say I've used a dozen platforms out there, from Merrill Edge, Schwab, First Trade, M1 Finance, SoFi, right? The list goes on and on and on. But I was looking for a platform that I could use for my early retirement function, and Fidelity is going to be that best platform. And I'm going to go ahead and showcase why that is. So this individual had the same question that I had, which is, can I use Fidelity as, my brokerage account, but also to pay bills? Because they have a routing number, an account number, it is definitely one of the better options out there. So Fidelity representative responded back, yes, you can absolutely do that. You can use your brokerage account to pay bills such as card registration fees, property taxes. You can set up direct deposits. You can get cash back directly into your investment account. You can use the bill pay service, right? You have the whole option all in one platform right there. So right off the bat, hey, my investment account can be used to pay bills. That's gonna already have quite a bit of control right there, outside of a checking and debit card account. And I'll go ahead and show you a couple other bonuses of using the Fidelity in the way that I've begun to set it up. So number three, the smart credit card strategy. How this all begins is, first, in this case, you want to use a credit card that has a cashback and reward feature. And you need to be able to, number one, pay off the balances in full every single month to get the true benefit of that 0% interest. You don't want any sort of interest on a monthly basis, yearly basis, none of that. Next, you want to be able to automate the cashback. Now, there's a lot of platforms out there that offer anywhere from 1 to 2%, or can fluctuate depending on where you're spending your capital. On the Fidelity platform, it's 2% flat when it's moved and transferred into an investment account. So that is something that I wanted to do. And I want to be able to automate my investments using those rewards. So I'm going to go ahead and showcase how that can be done. So let me know down in the comment section below, what is your go-to credit card strategy right now? Do you go for a 1%, 2%? Do you like the ones that let you get 5% in dining or hotels? Let me know down in the comment section below. I used to have a cashback card over with USAA, which had a 2.5% cashback. And I just recently noticed that I was only getting 1.5, and that was swapped out a few years ago. And here I was not taking advantage of getting the extra percent cash back from other platforms. So recently, as of a few months ago, this is a strategy that I began putting together and has been working really, really well. Okay, so let's jump to number 4, turn rewards into investments. So small wins. So right now off the board, what is your spending on a monthly basis? Is it about $2,000, $4,000, $6,000? Just kind of think about it in your head. Fidelity offers that 2% cash back. So if you're spending $2,000, that's going to be cash back of about $40 a month on average, deposited back into your investment account. Are you spending $4,000? That's going to be $80. Are you spending $6,000? That's going to be $120. You're going to get a kickback of cash back inside your investment account. Now, with that cash back, so on average, say you're spending about $4,000, that's going to be $80 a month that you're going to be kicked back into your investment account. Now, you can reinvest that capital, rebuying fractional shares. Now, I've been, again, lots of platforms, only a few platforms of the few that I've used offer fractional shares, while many of the newer investment accounts offer it, like M1 Finance, Robinhood, Public. Not a lot of the old institutions do the fractional shares. Merrill Wedge doesn't do it. Schwab doesn't do it. Fidelity is the only big traditional account that offers fractional shares with both individual stocks and ETFs. Now, another thing here is their money market account, which we'll go ahead and cover in just a second, because every bit is going to count when you're looking to live off of your investments and all that going forward. So here we go. Number 5, uninvested cash begins to add up. So as we said, if you're spending on average about $4,000 a month, that's going to be a consistent $80 back in rewards, or about $960 a year in yearly cash back. Now, Fidelity has a SPAX account. Now, of the many, again, brokerage accounts that I've used, the Fidelity one has the best sweep money market feature. Now, the sweep feature, you just have to have the capital in your account, and it does all of this automatically. Merrill Wedge, Schwab, no other platform does this as well as Fidelity. So here we go. I went ahead and included a little snapshot as of today. As of today, if you have your capital just kind of sitting uninvested over at Fidelity, it offers a 7-day yield of 3.95%. So this is larger than Ally. This is going to be bigger than any one of your traditional bank accounts out there, like USAA, Chase, the list goes on and on, right? This is a 7-day yield of 3.95. They're really good about taking the cash that's uninvested and just sweeping it directly into the money market account. And they give you a little notification when you log into your account how much in interest you've been able to accumulate from that money market account. It's a really nice feature to see. If you live off your investment account and you're applying things on your credit card, you're paying your credit card off every month, you're getting roughly $80 in rewards every month, you're getting about $1,000 a year in cash back, but you're not investing it right away. It's kind of sitting in your investment account waiting to invest either on a dollar cost average basis, or you're investing heavily when the market goes down. That means that that money that's uninvested is going to be able to interest of about 4% on average per year. It's going to be higher than most accounts. So that's a feature that I'm using right now where I'm not investing as heavily, right? I'm not taking all the dividends that I have left over and reinvested it all right away. While it is nice, the market is trading at all-time high. So I'm still staying with my dollar cost average plan of investing just a specific amount on average per week. And the rest of the capital, as I've said, I'm using that to pay expenses through the credit card. I apply everything on the credit card. I get that 2% cash back, and then everything is paid off. Any leftover stays in the money market account, making that 3.95%. And it just reinvests on a weekly basis with the extra remaining portion of that, and compounds and compounds. Now, when there are dips in the market, anywhere from a few percentages at a time, I will increase the threshold of how much I'm purchasing, but this is just a really nice feature. As we said, just a quick recap, the Fidelity account is going to be the biggest and best account out there if you are looking to retire early, because your investment account is the all-in-one platform for basically checking in savings. Your capital sits in there. It generates 3.95% APY. The cashback feature from that 2% cashback card is going to be hitting your investment account right away. It's going to also be taking advantage of that 3.95%. If you're getting dividends on a monthly basis and it's being used for expenses and you don't want to use it right away, right? It just kind of hitting your account. You're not wanting to reinvest it right away because you're going to be using it in expenses. So it's sitting there. It's going to accrue interest as well per month. And then when you do have your expenses, you pay off your credit card, you pay off your bills, that capital that had been sitting there until you paid off your bills will accrue interest on the next month. And you'll be able to take all the capital that you've accrued and either invest it and wait for your new cash flow deposit, your new dividends, all that new stuff on a monthly basis that kind of goes into the account and rebuilds itself back up and goes and does that on a monthly basis. I know it might be a little bit confusing. Let me know down in the comment section below if that's a little bit too confusing. Hopefully it was not. So let's chat. What is your credit card and investing strategy right now? Let me know in the comment section below. Do you guys use a 1% cashback card, 2% cashback card, or is there something that is much better out there? Would you rather have a high cashback card or a low interest card? Meaning that you have some debt, you're moving from month to month, and you're trying to pay it off, so you're just kind of taking advantage of that low interest card. Or would you rather go for that higher cashback card that has maybe a little bit higher APY, but because you're paying it off on a monthly basis, it doesn't affect you? Let me know down below. Now, I did update my tracker. If you guys are below the tracker, get started in the investment challenge. And I went ahead and updated this to the Google spreadsheet. So the Google spreadsheet got a little snippet right here. It's going to look a little bit different. Now, I didn't remove the PDF version, so you guys can still download the PDF version, print it out, and add and keep track of your weekly deposits and account value just as you would in the past. But I did have a few messages to get a Google spreadsheet version, and that has been created. We'll cover that on our Thursday's videos, so definitely stay tuned for that. Subscribe for more weekly videos, and let me know down in the comment section below if this was helpful. I tried to be transparent, as transparent as I can with this information, because I really just wanted to have one all-in-one platform that can be used whether you're in your 20s, 30s, and 40s, that you can plan to use when you retire early as your all-in-one platform. Fidelity offers all of that all in one place. And I kind of showcase a bit of the strong points there with that 2% cashback card, the cashback hitting your investment account, your dividends that hit the investment account. If they're not all used for your expenses right away, but you don't want to invest it right away either, it's still getting that 3.95% APY, which is much higher than any other traditional bank account's going to offer you, even SoFi, Ally, and other platforms. So hopefully that recap was within it right. If you're ready to combine smart credit card use and consistent investing, grab my free $1,000 investment tracker below. And again, if you guys found this information helpful, give it a like, subscribe. It helps the algorithm and helps more people learn to build wealth the right way. So we drop new content every week, so definitely hit the bell so you never miss it. Thank you all for tuning in, and I will catch you guys in the next video. Bye-bye.